Good afternoon and welcome to today's SEDCOR webinar. My name is Michael Fowler. I'm the CEO of Cabinet Door Service and your SEDCOR board chair. We're all very glad that you've joined us today. Before we get started, I want to remind you that we have an opportunity to answer your questions during and at the end of the presentation. Please be sure to use the Q&A feature in Zoom to send your questions. It doesn't work well when you use the chat feature. Q&A does a better job of sorting and presenting those questions to our moderator. Please, if you can, try and keep your question brief and as specific as possible so that our panelists can read them easily. We do want to extend a special thank you to our sponsor of today's event, Oregon State Credit Union, and invite John Doty from their team to say a few words. John.
Good afternoon, everyone. I am John Doty, a senior credit analyst with Oregon State Credit Union. We are grateful to have the opportunity to sponsor this event. As a full-service, not-for-profit financial cooperative, the credit union remains committed to delivering financial solutions to make lives better. Now in our 68th year, we continue to accomplish this vision, serving over 132,000 member owners and invite membership for anyone who lives or works in 24 of Oregon's 36 counties. This includes online access, as well as local service available through SEDCOR's Mid-Willamette Valley footprint, with branches in Dallas, Kaiser, McMinnville, Monmouth, West Salem, and Woodburn. The credit union is committed to delivering an unsurpassed service experience through member focus and a passion for service, offering a full slate of deposits and loan products, as well as investment, real estate, and business lending solutions. We constantly strive to remain relevant in the financial lives of our members and recently launched our early direct deposit program in February. At Oregon State Credit Union, we also recognize that we are part of our larger communities. Our goal is to remain a sustaining resource through our philosophy emphasizing education, youth, and serving the underserved. Last year, the focus culminated in donations exceeding $224,000, benefiting 66 organizations, schools, and local nonprofits, over 3,400 community volunteer hours, and our team donations to our United Way campaign surpassed $20,000. I have worked with Main Street businesses across Oregon and know firsthand the positive employment and social impact small business generates in all of our communities. Having traditional and non-traditional funding and capital sources to get started, grow, and innovate is vitally important to small business. In addition, having trained employees with family wage jobs is critical to small business and our community's success. On behalf of the credit union, I join you today and looking forward to learning more about the State Small Business Credit Initiative and the Future Ready Oregon 2022 programs. Welcome to everyone here today. Thank you.
Thank you, John. And please extend a thanks to the entire team at Oregon State Credit Union for your continued support of SEDCOR. Today, we are very excited to bring you an expert panel of resources to discuss two new funding resources for your working capital and workforce needs. Today, we will hear about two programs that have the power to bring a combined $280 million or more to the state of Oregon. We'll hear from a panel of experts about Future Ready Oregon 2022, a $200 million statewide investment in Oregon's workforce system later in this program today. But first, we'll hear about the State Small Business Credit Initiative program, which is expected to provide Oregon businesses access to over $80 million. Our first presenter, John Saris, he's the finance manager at Business Oregon. To meet his schedule for today, we will be handling Q&A at the end of his presentation. The other presenters will be handling their Q&A questions at the end of their presentations. Please join me in welcoming John Saris.
Thank you, Michael. Appreciate the introduction. And also for the group, I've got interviews this afternoon that start at 1, so really appreciate you accommodating my schedule here today. Have a really great opportunity to talk to you a little bit about a new program that that we will be deploying capital through, and just wanted to make sure folks were aware. It is a state small business credit initiative, and to give you a little context as to what it is, back in 2010, the federal government passed a program called the SSBCI, or State Small Business Credit Initiative. And the intent of it is to deploy capital from the federal government through state agencies like Business Oregon, and ultimately support access to capital needs for growing and startup related businesses. Back in 2010, the program was funded with about $1.5 billion, and states had the ability to identify what was going to be best used or available to support small business needs through a couple of different programs. One is a loan guarantee program. This is a lot like a SBA 7A insurance type product. There are loan participations where states can purchase or provide subordinate funding, capital access programs that provide loan loss reserves, and then venture capital programs that support angel, seed stage, and venture capital type investments. So back in 2012, when we received the money, the state ran this through a loan guarantee program and did some pretty good stuff. But what we're talking about now is this more recent version of the program. To give you a sense of scale, in 2021, Congress reauthorized this at $10 billion, so about sixfold what this was. And essentially within this, there's a couple of certain allocations. We've got $6.5 billion that was just allocated to states generally by population and some census data. And there was in that $500 million that was reserved for very small businesses, companies with less than 10 employees. And then there's $2.5 billion that's set aside for what are called socially and economically disadvantaged individuals that own businesses. And then there's some funding for tribes, and then some funding for technical assistance. And that's the allocation that we have. Right now, Oregon's been allocated about $83.5 million, which is sizable. To give you a kind of a sense of scale, if you took all of the appropriations that the state of Oregon, the federal government have provided for finance programs like this, the total is about 35, maybe $40 million. And now we're talking about $83 million coming in all at once to deploy capital. So with this funding, Treasury has some rules, some guidelines that they are looking for. And ultimately, the first one is that for every dollar of federal funds that we get through these programs, we have to match it with $1 of private capital. Throughout the program, we have to actually demonstrate that $10 of private capital is attracted for every dollar of this federal funds. So this isn't going to be a program where the state is out making investments on its own or making loans to businesses on its own. We're going to have to collaborate, and I'll talk to you about Oregon's approach and how these funds will be deployed with various different partners. There are project limits, again, small business focused. The federal definition for small business is 500 employees and project size at $20 million maximum. In Oregon, to give you an idea, sense of scale, what we're talking about, average business is going to be probably fewer than 25 employees. And we're talking about transactions right now, our largest transaction size would be about $8 million through our loan guarantee program. The rest of the programs are going to be focusing on projects that are generally $1 million or less. And we'll kind of get through some of those in a little bit. The use of funds, Treasury is going to provide us with some rules. They're restricted. So like refinances are going to be prohibited to a large degree. And they really are going to focus on new lending opportunities for business growth and expansion and startup. There's going to be interest rates and advance rates and things like that that we're going to have to manage. These are all programs that are designed to be kind of ongoing programs. So it's not one-time funding that should go away. We should be able to continuously use it. If I go back to SSBCI 1 or State Small Business Credit Initiative 1, we were awarded about $16.5 million. Business Oregon still has that $16.5 million, and we're continuing to deploy it. And so kind of going forward, Business Oregon found out about this, and just so you guys know, we're the state's economic development agency. We do a lot of things from infrastructure improvements for communities to global trade and export assistance. We do certifications for small business. And then my team manages finance programs that support small business growth, retention, and expansion. We do direct loans, so we'll make direct loans to businesses. We do loan guarantees, so we provide insurances to banks and credit unions that are making these loans to businesses that couldn't otherwise qualify. And we do what are called conduit bonds that support manufacturing and ag production. So when Business Oregon found out about this opportunity a little bit over a year ago, we wanted to sit down and look at what Oregon's needs are and how we could best deploy this and fill gaps that are out there. By going through this, we work with a number of external partners. We have boards and commissions that we're engaged, but we actually talk with partners that we already work with at banks and credit unions, investment fund managers, and our local economic development districts and our CDFI partners to figure out how we could best deploy this capital. So in the end, what we did in Oregon was we basically split the money about 50-50. The first part of it is really funding for innovation, equity, and debt capital. So think of this as venture capital, angel, seed fund, mezzanine financing to support high growth business opportunities that are going to be scalable. And the other 50% is going to look more like your more traditional bank and credit union debt or loans made by Mid-Willamette Valley Council of Governments to small business to support startup and expansion. And throughout this, again, we have to make sure that we're getting that 10 times private leverage. And I'll talk a little bit about that as we talk about the programs and the partners, and that we need to be able to deploy the capital within 90 days. Where we're at right now is we've submitted our application to U.S. Treasury. It's in process. Actually just had a call today to go through our final programs with them. We expect them to recommend approval of our plan to the review committee at U.S. Treasury probably within the next 10 days. And we'll see where we're at as far as getting a contract executed between the state treasury. So we're getting close. We've always kind of internally had a July 1 to have most of the programs online. So that's kind of the timeline we're working on right now. I will throw out that in the last 3 weeks or so, Congress has looked at a proposal that would reduce funding for this particular program by about $2.5 billion. That would result in about a $20 million cut to our state allocation. We're obviously working with our congressional delegates and others to see what we can do to preserve this, because in the end, this is a program that's going to provide capital to over 1,000 businesses. It's going to generate, in our projections, close to $1 billion of private capital leveraged over the 10-year period, and create and retain more than 5,500 jobs in Oregon over the next 10 years. So these are substantial economic development tools. And as I previously mentioned, this is a lot of money compared to what we normally have done. So our allocation, well, I'm going to skip that. And so, like I said, about 50% of the funding is going to go towards early stage capital. So the first way that we're going to deploy this is through basically venture capital fund managers. We've got right now $30 million that's allocated towards this model. Within this model, that $30 million is going to be deployed in two different ways. The first way is that fund managers will apply to the state, and we could award the funds a allocation as part of their capital raise as they're putting together a new investment portfolio. And that raise would then be matched by other private investors coming in. So for example, we have an angel fund that's looking to raise $5 million. We would award them $1 million from this federal fund, and they would hopefully attract $4 million of private capital. All of that money would then be deployed to support small businesses through the equity investments that those fund managers would do. The other path is through what we're calling a direct investment. Now, Oregon is statutorily or constitutionally prohibited from taking an equity ownership stake in businesses. So in order to do this, we're going to pass the money through a investor who will do the due diligence on behalf of the state. And so fund managers will come to them with a project and say, hey, we're looking at making an investment of, $500,000 into company X. They actually need $1 million capital raise. Could you also come in and co-invest with this? And that investor would negotiate the terms of the transaction. Where the private leverage would come from in that particular transaction would be from follow-on investments. Because when a early stage company is attracting capital, usually something like this is one of many rounds of capital that are provided. And so the additional follow-on investments are where the funding would come from. So those are two paths with the $30 million. And we could go into a lot more detail, but we've got other folks behind us. We also have some debt instruments that we're going to be using in this early stage capital space. We've got $12 million currently allocated to two different types of loan programs that are focused on venture space businesses. The first one would provide royalty loans. These again are going to be early stage, high growth companies that need working capital to scale operations, largely used for payroll expenses, inventory, marketing, those kinds of things that are kind of intangible assets, hard to raise financing for when revenues are very limited. So that loan program would be the repayments would be based on a percentage of sales. As those payments come back, then the money could be recycled over time. The other type of a loan that we would be making through this venture debt type of program would be an angel loan. It's a little bit more of a patient capital program where the state would get a modest interest rate during the investment period, but the repayment is largely due at a liquidation event or some kind of merger or acquisition or buyout down the road. And there's a valuation of the company at that time, and the state would get a percentage of that for their risk and to repay the loan back to the department. Again, those funds could be repurposed and recapitalized. With the venture debt programs, they will be contingent on private equity raises. And again, these are companies that are going to be high growth, scalable type of companies that are going to attract future capital that could be used towards our private leverage. That's about 50% of the funding. The other 50%, again, going back to the more traditional commercial debt, would pass through two different programs. One is the state's loan guarantee program. Right now, we will insure credit union made and bank made loans and lines of credit to small businesses. These can be used for purchasing a building. They can be used for operating lines for inventory, payroll, receivables, those kinds of things. Equipment loans, permanent working capital loans. So really a lot of things that businesses need. Right now, we can provide guarantees up to $2 million. With this funding, we would take it, and there's about $32.5 million that's allocated to it. Our guarantee exposure would be able to go up to $6 million. So pretty sizable jump, but again, we're still supporting small business. Anybody that's looked at acquiring a piece of commercial real estate or building a building understands that it costs more today and quite a bit more than it did a few years ago. One thing that we are adding with this loan guarantee program is a construction loan insurance. And there's really nothing else like this out there from the federal government and obviously the state or anywhere else. One of the more difficult pieces of credit for businesses to get is a construction loan because there's risk to the lender during the course of construction. There's construction risk and borrower risk because if there's a decline in credit quality, that creates a problem for the lender after the construction loan is ready to mature and be moved to permanent capital. So the state would be looking to insure construction loans made by banks and credit unions, which would be new. So that brings us to our last type of funding, and we're calling this the Business Oregon Relender program. This would be brand new. And this would be a partnership with the state's economic development districts and CDFIs and also nonprofit lenders. So the point of this program is to meet small business needs that aren't going to be able to be met by a bank or a credit union. They generally have too high a risk. The companies are generally startups or very, very early. And even with a guarantee, lenders typically can't get comfortable with them. The other thing too is that they're generally smaller in scale. One of the things that we've observed is that access to capital is very difficult for companies, especially if you get under $100,000. It's challenging. This program would basically support up to $250,000 loans made by these partners. How it would work is, and the point of the program is to help leverage and expand the amount of money that these lenders have. A lot of them are constrained by the amount of loan capital they have available to support small business. And so the state essentially would buy a portion of the loan that they would make. An example would be Mid-Willamette Valley Council of Governments makes a small business startup loan to a company for $100,000. They could come to the state and we would purchase up to $50,000 of that loan and basically help them extend the capital that they have available to support small business needs locally. The cost of funds would be below market rate. The lender would repay those monies back to the state as they are getting repaid from the borrower. And these programs are going to be very good at meeting kind of local needs and deploy the capital through local partnerships. So that's really the 4 different ways. I could probably spend an hour on each program kind of diving through all the details. We had set up a group of webinar series that was going to go into these programs in greater detail. But because of what Congress is doing, we actually put those on pause until we could get a better sense of what's happening with those potential reductions. At this point, we're assuming that the reductions aren't going to happen. And we're just going to move forward with our plan. And if they do happen, then we're going to need to pivot and take a look at kind of Oregon's deployment strategy and how we're going to meet our needs and also the needs of U.S. Treasury. So with that, I'm pretty sure I'm up against my time here. I'd be happy to answer questions, and thank you.
We don't have any questions in the Q&A, John, but I would ask, so if somebody wanted to access some of these programs, sort of what's the best front door, or where's the best, and then of course, a little bit of a plug for SEDCOR, right? Because we tend to field some of these, but.
Yeah, and it is going to be working through our partners. A lot of times it's understanding what the right capital product is for the company. And so working with a partner like SEDCOR and with the regional development officers and our finance officers here, we normally are going to try to sit down with the businesses and figure it out. To get to venture capital, honestly, we've got 2 portals, fund managers, and then our direct investment. And then, you know, again, I think we'll sit down and it will refer them to banks and credit unions if that's going to be the right route, or to our local economic development partners.
We do actually have a couple questions here. One, just how do we reach you specifically, John?
You know, I'd be happy to share my phone number and email address with SEDCOR, and you guys can feel free to push that out. And then 2, I will encourage folks, we are going to get this presentation series going again, and our plan is to do about an hour-long overview like this, and then about an hour on each one of these program types. So if there's something you're really interested in, we can really dive into the nuts and bolts of it.
Yeah, and we'll be happy, I'm sure, to share those things when they come out and in our weekly email that we send out. So, well, thank you so much, John, for your time. Won't take any more of it. I'd love to pass this on to our next group, which is I'll pass it to Jennifer Purcell from the governor's office, and hopefully she can introduce Marin and Kim and get the next half of this presentation on the way. So Jennifer, take it away.
Great. Thank you so much, Alex. Thanks for inviting me to join you today to talk about implementation of the Future Ready Oregon Workforce Investment Package that was recently passed by the state legislature. As was mentioned, my name is Jennifer Purcell. I am Governor Brown's workforce policy advisor, and I'd like to start off by thanking the Racial Justice Council and the members of the governor's workforce work group for their leadership on Future Ready Oregon. In particular, I'd like to thank work group co-chair Marin Areola, who is with us today, as well as work group member Kim Parker. You'll be hearing from both of them a little bit later. Their leadership in crafting and ensuring passage of this historic set of investments paves the way for an equitable recovery and an inclusive workforce system. We know that the pandemic recession disproportionately impacted our historically underserved and vulnerable communities, particularly people of color, low-wage workers, women, and rural communities. Future Ready Oregon provides a comprehensive $200 million package of investments that work together to advance an equitable workforce system. The investments combined state general fund and federal ARPA funding, the American Recovery Plan Act, to support people with education, training, and resources they need to get into good paying jobs. But now the responsibility falls on the Higher Education Coordinating Commission, or HEC, the Bureau of Labor and Industries, or BOLI, and the Youth Development Division, as well as local workforce development boards, community colleges, and other community partners, to make sure that the implementation of Future Ready Oregon matches the vision and intent. I'm going to share a couple of slides with you today that will help provide an overview of the funding opportunities, the guiding principles, as well as some next steps. So bear with me and I will share my screen. All right. So this first slide provides an overview of the investments in Future Ready Oregon, which fall into three main categories. First, investments that leverage existing successful programs. Next, investments that encourage innovation. And then lastly, investments in measuring impact. Looking at those investments that leverage existing successes, first we have Prosperity 10,000. This program is established in the bill and provides $35 million to local workforce development boards to expand their capacity to provide start-to-finish career coaching services, develop paid training opportunities, and provide scholarships, stipends, and wraparound supports. Next, we have Career Pathways. Career Pathways are a series of connected education and training programs and student support services. And Future Ready Oregon provides a nearly $15 million investment that will allow Oregon's community colleges to scale up their Career Pathways programs. Next, we have an investment in registered apprenticeships. The Bureau of Labor and Industries will use $20 million to recruit new programs and facilitate innovation, providing grants to organizations that offer training resources and direct benefits to apprentices. The next investment is in the Youth Development Division. The Youth Development Division will expand access to high-quality, community-based workforce readiness programs that reach youth who are disconnected from our traditional educational system through youth re-engagement and work readiness grants. This is a $10.5 million investment. And the final investment in that leverages existing programs is a $10 million investment in credit for prior learning. This will allow more Oregonians to receive credit for the knowledge and skills that they've gained through work and life experience, through military training and experience, and through formal and informal education and training. This $10 million investment will expand Oregon's community college and universities' ability to implement credit for prior learning standards. The largest investment in Future Ready Oregon is $95 million in competitive workforce ready grants. These grants are intended to encourage innovation and broaden the partners that comprise our workforce system. These grants will be available to community-based and nonprofit organizations, education and training providers, and local workforce boards to provide direct benefits to individuals, fund the creation and expansion of education and training programs in the key sectors of healthcare, manufacturing, and technology, as well as expand the capacity of organizations to provide workforce development services. A $10 million investment in workforce benefits navigators will go to local workforce development boards to place benefits navigators in WorkSource Oregon centers and community-based organizations across the state. And the final investment intended to encourage innovation is a $1 million investment in the creation of 3 statewide industry consortia in the key sectors of healthcare, manufacturing, and technology. Industry consortia will convene employers, education and training providers, and community-based organizations in these key sectors of Oregon's economy to identify statewide workforce needs and high-value credentials, as well as improve systems alignment and develop recruitment and retention strategies. Now, throughout implementation, measuring impact will be necessary. The final investment is to expand the HEC's capacity for assessment, accountability, and continuous improvement. State agencies and workforce partners are in the early stages of implementation planning for Future Ready Oregon. Implementation will be guided by these core principles based on the priorities identified by the workforce work group. First, decision-making, including decisions around funding, policy, and process, must be grounded in racial justice and equity. And decisions must be centered on serving priority populations, which include communities of color, women, low-income communities, rural communities, veterans, persons with disabilities, incarcerated and formerly incarcerated Oregonians, members of Oregon's 9 federally recognized Indian tribes, individuals who disproportionately experience discrimination in employment on the basis of age, and individuals who identify as members of the LGBTQ+ community. This will help ensure that opportunities created under Future Ready Oregon are inclusive and culturally and linguistically appropriate. These opportunities must also be tied to the skills and occupations that employers need and to jobs that pay a family wage. And these opportunities must be the result of deep collaboration and partnership across sectors and communities, and should take into consideration the impacts of culture, climate, and the environment where workers are placed. Finally, Future Ready Oregon includes assessment and accountability standards and practices that will inform continuous improvement. I will close with a few notes about near-term implementation opportunities. The top priority is to administer state general funds and then to focus on federal ARPA-funded investments. State general funds must be spent by the end of the biennium or by June of 2023. In contrast, the federal ARPA funding does not have to be obligated until 2024, which provides us a bit longer runway, allowing the state to be intentional about investing in new and innovative programs and approaches to workforce and talent development. We anticipate these funding opportunities will be available on a phased or rolling basis. The most pressing deadline is for the Prosperity 10,000 grant program, expanding programs and services at our local workforce investment boards. And you'll hear from Kim Parker shortly about these opportunities. The state anticipates that funding will be available to local workforce boards in the coming weeks. Also in the very near term, likely in early May, I expect BOLI, the Bureau of Labor and Industries, will issue a request for applications for the first round of funding to expand, diversify, and strengthen registered apprenticeship programs in the fields of healthcare, manufacturing, and technology. Next, the Higher Education Coordinating Commission expects to issue a request for applications for the first round of Workforce Ready grants. This will be in early May as well, and these funds will be awarded to grantees likely in the middle of summer. HEC convened a work group of partners from community-based organizations, state agencies, local workforce boards, and education and training providers to help create this initial request for application. And the work group determined that this first round of funding should focus on organizational capacity building and planning, with a particular emphasis on reaching smaller organizations and those new to workforce development. Again, these grant opportunities we expect to be available for application as early as mid-May. Later this spring, we expect the Youth Development Division to announce the Youth Reengagement and Work Experience grant opportunities. And HEC is targeting spring of this year as well for finalizing the Career Pathways grants for community colleges and summer for the prior learning credit grants to community colleges and universities. Then they will move on to establishing industry consortia later this year and issuing grant funding for workforce benefits navigators in early 2023. Now I will turn it over to Marin Ariola, Racial Justice Council member and co-chair for the Governor's Workforce Work Group. Marin will talk about the important leadership role that community-based and culturally specific organizations will play in implementing Future Ready Oregon and advancing equitable recovery and upward economic mobility for Oregon's historically underserved and vulnerable communities. And with that, I will turn it over to Marin.
Thank you, Jennifer. I think you said it all. Anyway, my name is Marin Ariola. I'm president of Advanced Economic Solutions. We design and implement economic, workforce, small business development programs, and also work in supplier diversity, and focus a lot on diverse markets, communities, and businesses. And as a volunteer member of the Governor's RGC Council, as Jennifer mentioned, I will co-chair the Workforce Committee and a member of the Economic Opportunity Committee, Infrastructure Committee, and then the Health Equity Committee. How this got started back in the summer of last year, the governor's office asked a group of people for us to be part of a committee to develop a program or a proposal to address a lot of the inequities within the workforce system. And the reason being is because during the pandemic, as Jennifer said, you saw the exposure of a lot of, in terms of systems and policies that exist within government, and how we need to address those within healthcare, within workforce, within other areas. And so we had a committee of diverse businesses, public sector, nonprofits, and labor, and other areas. And we worked, I think every week we met. And honestly, I think we accomplished quite a bit. And thanks to the governor's staff and our committee members, we did it. But also, honestly, $200 million is a great chunk of change that I feel is just astronomical and historical in terms of this type of bill or a program. And so equity is a big issue with this new workforce program, because as you know, according to the U.S. Chamber of Commerce, I think our economy as a whole, in terms of our country, we can gain $8 trillion in GDP if equity issues are addressed within our systems, government, public or private. And so I think this Future Ready Oregon program will help address some of those challenges for the state of Oregon. And as you know, during the pandemic, many community-based organizations were really out there in the community on the front lines in providing support, outreach, engagement, education, and really helping especially vulnerable communities, vulnerable workers, BIPOC communities navigate and address the issues with COVID, with testing, but also in terms of navigating the health system. So with their efforts, honestly, they did quite a bit in really mitigating the impact of COVID within our communities, within our schools, within our economy, within our workforce. So we were thinking, why not use this model of CBO engagement outreach in working with workforce development and working in collaboration with other nonprofits, businesses, public sector entities, to really address and really do a great job in really preventing and addressing these inequities within the workforce system. And so the CBOs, again, like Jennifer said, are a big part of this program, and the funding shows that. And so one of the things that I see is basically that these CBOs, a lot of them work with vulnerable communities, will address cultural, linguistically issues that really will allow vulnerable workers and other workers to really engage and really access workforce services and programs at a level that's never been done before. I do believe that we can always improve, and I feel this centered on equity will allow for us to really address these issues. And I think right now, this program will be transformative, will be intentional, and really reinventing workforce development within the state of Oregon. I believe that every worker in any sector has a lot of value. So our goal is to maximize our potential through training, through wraparound support services, through engagement, through access. And as you know, right now, there's a lot of employers that need workers. So we really need to address these issues right now. And I feel this program will address that in terms of the funding that's available to support workers through training, to support wraparound support services. I feel it will address those issues. Right now, this program is really embedded in equity. And for me, that's really important because every process, every policy, the program design of this program, service delivery, has equity embedded. And that's really important to create that access and engagement with vulnerable workers. It's intentional, and I believe it will really provide positive results in really engaging those workers that have been left behind, especially during the pandemic. This bill is very historical. I do believe that from a business perspective, it'll create a better, higher skilled workforce, higher wages, increase labor force participation, create jobs, but also increase tax revenue for state and local governments. As a person that's sort of advocate for economic development, this proposal will address a lot of these issues. But again, it's going to be in a way that we all work in partnership, including SEDCOR, you as members. It's really important that we all engage. Collaboration is really key. I really believe in the value of collaboration. And I think during the pandemic, we saw that businesses, CBOs, government coming together to deal with a pandemic. We can do the same thing for workforce development. And it's an honor and privilege to be part of this committee and this council. I feel that the future belongs to all of us. And I feel that Oregon, every Oregonian will win tremendously from this program. Thank you. Kim, I'll leave it up to you.
Well, hello, everybody. Thank you, Marin. Thank you, Jennifer and others. I think that between Marin and Jennifer, you have a holistic view of the big picture. I was able to serve on this workforce work group sort of coincidentally because I'm the chair of the statewide Association of Workforce Development Boards. And I have to say, I think it was a fantastic opportunity and allowed me to voice what I believe communities, businesses need. And ultimately, the outcome is just fantastic. So the legislature was very supportive. Obviously, they funded the bill at its full amount. And it is go time is the way I am thinking about it now. We've been thinking about this and developing this for months. And I signed the contract with the Higher Education Coordinating Commission for our local area for that first chunk of dollars that Jennifer mentioned earlier, the general fund dollars. I signed that earlier this week. So locally, what does that mean? Well, the State Higher Education Coordinating Commission distributed the funds through a formula that we are familiar with because we receive our funds through formula. Our federal dollars come to us through formula. So we used a similar formula to distribute the dollars out to all 9 local workforce regions. And for those of you who may not remember, our region includes Marion, Polk, Yamhill, and Lynn County. So we are reaching out and working with our Lynn County partners as well. For this first chunk of change, we will receive in this 4-county region $1.9 million in change. And we need to wisely, responsibly, and strategically spend all of those dollars by next June 2023. And that's a lot of money for us to do that. So we, as you can imagine, have been working on this for months, and we'll be putting an application on our website. Hopefully, don't quote me on this, but the plan is it will go live by the end of next week. And we are doing things differently. We have taken the charge and the challenge to heart. And what we are going to be doing is funding cohorts of individuals through community-based organizations to get training that they need so that they can meet the needs of our employers. So as an example, there's been a group that's been working with the prison and the county jail system in the region to talk about people coming out of the criminal justice system and how can we contract with a community-based organization to provide training to those individuals so that they can be successful in getting a job. So it's not just training. We're going to pay for training. We're going to pay for whatever else they need to be successful in that training, childcare, transportation, et cetera. We're going to pay them to go to training if that's what they need, so that they can focus, so that the participants can focus on accomplishing their training so that they can go out and get a job and keep a job. That's just one example. Lots of discussions around healthcare needs, because we know that the healthcare system is constantly looking for new employees. And there's also a really strong career path in healthcare. So conversations have been ongoing for months. What we are going to be doing is putting this application on our website. We will be able to fund nonprofit community-based organizations up to $249,999 to fund this cohort of individuals with a training provider that is reputable, provide some support for coordinating all that work at the community-based organization level, and then really provide everything that individuals need to be successful to accomplish the ultimate outcome. So clearly our partners at Chemeketa Community College and Lynn Benton Community College have been part of these conversations. There are other people who provide, other organizations that provide training as well. So that is our plan. And frankly, we are also sort of testing some programs and preparing for the possibility of applying for additional funds, that $95 million that Jennifer spoke to earlier, that if we can do some pilot programs and figure out what might really work well, then there's an opportunity for us to apply for larger increments of dollars to really expand and serve more people and more employers. So that's sort of the detail, and it's evolving, as you can imagine, but I think that hopefully you've seen the big picture from Jennifer and Marin, and then in terms of this very specific dollars that are coming to the Willamette Workforce Partnership, the local Workforce Development Board, those are our next steps and our plan of implementation.
Kim, is there, you said you were fund community-based organizations to fund cohorts of employees. Is there an opportunity for employers to put together cohorts and then run through, I guess, how identifying
Yes.
groups of folks, specific training opportunities? Could you maybe expand on that just a touch?
Yes, for sure. So if an employer wanted to provide training to a group of individuals and have a training provider who can provide that training for them, the training, it would be best if a community-based organization applied sort of on behalf of the employer, because that's really the focus of the Future Ready Oregon work. But I think that, this is an opportunity for us to do a little, don't listen to this, Jennifer, but experimenting. We're really clear on what our contract says. We're really clear on what the bill says and what the Future Ready Oregon intention is. And so that's how we've developed and structured our program. But I also think that there might be, not everything's going to fall into that nice little tidy package. And so there's an opportunity for us to work, individually with either businesses or organizations to develop a program that would be eligible for applying for the funding.
And maybe this question, Jennifer, please go ahead.
I was going to pop in and just say yes, and so Kim is spot on. Really, the intention behind Future Ready is to incentivize collaboration between employers as well as community-based organizations and education and training providers. And the workforce boards are in this unique position of being able to help with that convening capacity and bringing together the needs of employers along with community-based organizations and the communities that they serve. and matching those up with education and training providers. And really the intention behind Future Ready is to do a little bit of experimenting and to look at new and innovative approaches, what we're learning about best practices in workforce development, so that we can, again, diversify the workforce and ensure that folks have the skills that employers are looking for, and really put Oregonians, particularly in those priority populations, on the path towards upward economic mobility.
For all the different programs you mentioned, and there's one question from the Q&A, sort of how are the dates for all those applications being advertised?
I appreciate that question. I'll take that first, just sort of with the broader lens. I will say, if folks go to the Higher Education Coordinating Commission website, you can just Google Oregon Higher Education Coordinating Commission. On their homepage, they have a tab for the Future Ready Oregon funding opportunities. And I anticipate that you will find links there to all of these opportunities. In addition, you can sign up for a listserv so that you'll get immediate notification of those funding opportunities. And then I will just also say BOLI, for folks who may be interested in registered apprenticeship or pre-apprenticeship program opportunities, their request for applications should be available on their website in short order, as well as the Youth Development Division programs later this spring. The programming that Kim mentioned, particularly for Willamette Workforce Partnership, and those direct sort of local or regional opportunities, I would expect to be available through the workforce boards, but maybe Kim, you could let folks know where that, oh, there, she just put it in the chat, the website for that. So
yes, thank you, Jennifer. So we will have updates on our website. We also send out a newsletter typically twice a month. So if you're interested in, or when, as you know, announcements occur. So if you're interested in receiving that newsletter, please go to our website or send me an email and I'll make sure that we get you on the listserv.
We had one more question around, can training occur outside of the US if there's no manufacturing of the type we need in the country at this time?
Yeah, that is a really, really great question. And I think the answer is it depends. When we have talked about this internally with staff, we're like, you know, we're not going to fund the training provider who just started last week in their backyard. So we have to be, reasonable, I guess I would say, with the training provider that we're funding. So let's talk about it. If there is no other opportunity to get this training in the US and you're really trying to focus on something super specific and it's only available outside of the US, then, you know, I think, I don't know. I really don't know. We'd have to talk about it, but I wouldn't say no.
I would echo the I don't know. It's worth a further conversation, and just add that later this year, we expect the Workforce and Talent Development Board to be convening those industry consortia. And so particularly as we think about manufacturing and the convening of manufacturers in Oregon, education and training providers and community-based organizations, it really will be part of the industry consortia's charge to identify what are the workforce needs for manufacturers in Oregon, and where are their gaps in terms of credentials and skill building opportunities. So that individual may be interested in engaging in those conversations at the statewide level as well.
That's great. Is there, I guess, maybe you mentioned this, you probably already did, but those consortia, I guess, how would I, if I was a business, how do I get involved? Like how do I raise my hand to sort of be there? And I know from a SEDCOR perspective, we tend to kind of show up to some of those things and we convene some of our own consortia as well, but be curious, what's that process look like?
So the planning, the early implementation planning for that is in the works now. It will be the state's Workforce and Talent Development Board that is convening those groups. I suspect that they will bring on a consultant to help provide that convening capacity. But I know they're working closely with Oregon Business Council, and certainly will lean on organizations like SEDCOR to help with connecting with employers. More to come, but I would say the Workforce and Talent Development Board, it sits within the Higher Education Coordinating Commission. So again, go to the Higher Education Coordinating Commission webpage, sign up for listserv updates, and the industry consortia will be part of that.
Thank you. That's great. Yeah, and I suspect that we will, from the SEDCOR perspective, be following along and trying to sort of get involved and advocate for our industries as much as we can. So I don't see any more questions in the Q&A. I'd welcome any final thoughts, or I will happily sort of let people sort of get back to their. Oh wait, actually, Nick has one more question. Nick from our staff: statewide commodity commissions could do worker training. He's asking, would that be an appropriate use for safety, handling, etc.?
Yes, I think so. Yeah,
yeah.
Definitely.
Yeah.
I mean that. Yes.
That's a very interesting approach, and I like that a lot. I, on behalf of SEDCOR, I want to thank John, who's left us already. Kim, of course, Jennifer, and Marin for a great presentation and interesting conversation about an exciting new program. I extend an additional thank you to our sponsor, Oregon State Credit Union, for supporting SEDCOR and our work in this region. And just welcome everybody to stay up to date on future events by following SEDCOR on social media, our website, events. And then, of course, we send out a Friday email sort of blast every Friday, and we will continue to keep involved and keep our sort of finger on the pulse of this program and others. So with that, please enjoy the rest of your Wednesday. Thank you for attending, and we'll see you soon.